Hello and welcome to another update video about Ethereum. The Ethereum chart has been maintaining its sort of breakout position. Obviously recently broke out above this wave 3 high that we had on the chart, the 15th of February high. And we had 5 waves to the upside. 3029 was reached. That was the first, well, ideal target. Ideal target that we received by measuring and comparing the waves 1 to 3, or 1 through 3 actually, it's the entire length, and then you compare that with the length of the wave 5, and oftentimes a wave 5 falls into this range. We then said, okay, we've got 5 waves to the upside complete. That definitely increases the likelihood that really a lasting low was established here on the 23rd of January. And we can work with that structure. We can add a support level or range to the chart, which I did. It's between 2,328 and 2,667. However, I'm not going to tell you the price will get into this region now because the uptrend is very much still intact. While we have a little bit of choppy corrective price action, we haven't taken out a previous swing low and we haven't fallen back below the breakout point. For me, that's not yet the start of the wave 2. It could have started, but I need to see some evidence, It's not that I expect the price to start a wave 2 now. I am cautious, or from an analysis point of view, I'd be cautious about this. It could happen. If the market offers it, I think that's the right mindset. If the market offers a pullback, then it could be an opportunity. And if there is one to maintain this structure, the market should hold above, or Ether's price should hold above 2,328. That's the critical 78.6 Fibonacci retracement. Any break below that level will likely lead to invalidation. Probably tomorrow I will have an alternative scenario ready, what we could do with that structure in case we see a break below that level and then invalidation with a break below the 23rd of January low. I'm still working on some options, but it's a 5-wave move up. What can I say? And we did have on the chart before a high B wave scenario. I've taken that off now because we have 5 waves up. That's what I always said. We cannot rule out a high B wave until we see a 5 up move. Well, ideally we also see 3 waves down. The thing is, wave counting is to a degree subjective. It's the Fibonacci levels that tell us the truth and that are objective. But still, the magnitude of that increase and the 5-wave structure, it respected very well. The Fibonacci retracements, extensions, all good. So, I'm leaning towards this 1-2 setup. An alternative perspective, I'm working on that, but that would only come into place or into play with a break below that 78.6 retrace level. At the moment, the market is... or the price is consolidating below that resistance level here, below that 38.2 extension. A push above that level would send it possibly even to 3,236, or at least to the top of the trend channel, the upper boundary line. It really takes a break below the Tuesday low here, a sustained break, a convincing break, to suggest that this wave 2 has started. It would be best if we saw a 5-wave move to the downside, which I don't see at this stage. Then a corrective rally, which would be the B wave. And that would likely confirm here the AB setup. And the C wave down would then follow. And then we can also calculate the target for the C wave more precisely. We also see on this chart a potential head and shoulders pattern, where the Tuesday low is the neckline. And it could also develop a larger head and shoulders pattern, where the B wave could be the right shoulder. But that is all speculative. Let's first see if the market can break below that green line. If not, then the uptrend is still very much in play and further extensions are possible. That's my update about Ether. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.